Hello traders, it's nice to meet you again on this lesson on how to master price action trading. When you are able to master price action, it will help you to form a strong basis for your technical analysis. There are a lot of professional traders who rely only on price action to make their trading decision. If you have a good knowledge and practice on price action, you can make out a profitable trading strategy. So, what is price action trading? It is trading with no technical indicators, only to follow the action of prices to determine the buying and selling situation in the market. However, there are some price action traders who still apply indicators to confirm their trading strategy. All the factors that are applied in price action trading can be put into three main categories that I call the triple C's: chart patterns, candlestick patterns, and confluence. You study the chart patterns to be able to identify the trend, support, and resistance levels. Study the candlestick patterns to be able to predict the current buying and selling situation in the market. And then you look out for a confluence, that is, you look on the chart to find at least three technical reasons that support your trading signal. These technical reasons could be any of the following: the trend, support and resistance levels, price breakout, price reversals, trend reversals, trend continuation, among others. A confluence is when you have at least three of these technical factors working together at the same time to support your buying signal or to support your selling signal. Alright, now I'm going to elaborate on how to apply these technical factors in a step-by-step guide to price action trading. First of all, you need to identify the trend on a higher time frame. For instance, if you are trading on a 1 hour chart, it is better to first of all move to a higher time frame like the 4 hours or the daily time frame to identify the trend. The reason being that on a higher time frame, you get a bigger picture of the trend. And remember, you increase your chances of making profits when you trade along with the trend. So if you identify an uptrend on a higher time frame, it means in a long-term perspective, the bulls are taking over the market. In that case, when you move back to a lower time frame, there will be high chances of winning your trade when you place a buy order. On the other hand, if you move on to a higher time frame and identify that the current trend is going down, it means that in a long-term perspective, the bears are taking over the market. The next step is to identify key supports and resistance levels on the higher time frame. You can do that by using the trend line tools to connect the high price point to form the resistance levels, and you connect the low price point to form the support levels. Again, you need to remember that when prices get to the support levels or the resistance levels, there are two things that can happen. It's either the price reverses back or the price breaks out the support or the resistance level to take another trend. The next step is to go to a lower time frame and identify the minor support and resistance levels. Again, you can do that by using the trend line tools to connect the highs and the lows. Next, if you identify the market to be in an uptrend on the higher time frame, move back to the lower time frame and look out for buy opportunities at the major support level. On the other hand, if you identify the market to be in a downtrend on the higher time frame, move back to the lower time frame and look out for sell opportunities at the major resistance level. When you identify the market to be in a sideways trend or a neutral trend on the higher time frame, move back to the lower time frame and look out for long opportunities at the major support levels, and look out for short opportunities on the major resistance levels. In normal circumstances, there are high chances of price reversals after hitting the support or the resistance levels. But if prices don't reverse after hitting the support and resistance levels, you can wait for the price to break out and wait to establish a new trend before you can make trading decisions. And the last step is when you are looking for a buy or sell opportunities on the lower time frame, you need to look for a confluence as a confirmation to your trading signal. Now, let me give you an example of a confluence situation. Remember I said confluence is when you have at least 3 technical factors happening at the same time to support your trading signal. Here's an example. When you look on the higher time frame, you find the prices to be trending up. When you move on to the lower time frame, you find the prices to be trending up as well. Again, the current price is at a strong support level. And at this strong support level, you can find the formation of a bullish candlestick pattern. So you see, over here we have 4 technical factors working together at the same time to make a strong confluence for a buy order. And that is how you increase your chances of winning the trade. In the next lesson, I'm going to show you some price action trading strategy for scalping, day trading, and swing trading. Hello, welcome to this lesson on a price action trading strategy for scalpers, day traders, and swing traders. Let us begin with the scalping strategy. With this strategy, the trades are carried out on a 5 minutes time frame, but you can still make it on a 15 minutes time frame. The first step is to identify the trend on the 4 hours time frame. After you have identified whether it is in an uptrend, downtrend, or a sideways trend, the next step is to go to the 1 hour time frame to confirm the same trend. When both the 1 hour and the 4 hours time frames are showing the same trend, it really gives you confidence to establish the fact that yes, this is the trend that the market is going. For instance, when you move on the 4 hours time frame, you identified an uptrend, and when you move to the 1 hour time frame, you still identified an uptrend. If that is the case, then since we always like to trade along with the trend, we have the confidence to take buy trades on the lower time frame. You use the trend line tools to connect the major support and resistance levels. So the next step is to go to the 5 minutes time frame and then you highlight the minor support and resistance levels. The last step is to look out for a confluence to occur on the 5 minutes chart. Let's say on a higher time frame, you identify that the market is in an uptrend. Then you have to look out for some of these technical factors as a confluence to make a buy trade. 1. When the current price is reversing back up from a support level. 2. When a bullish candle breaks the resistance level and retraces back to make a new support. And 3. When you identify bullish chart patterns and bullish candlestick patterns. Alright, this is for an uptrending market, so if you identify any of these bullish technical factors, it is a good confluence, so you can go ahead to make your buy trades. Now, let us look at the technical factors to consider as a confluence when the market appears to be in a downtrend. 1. When the current price is reversing back down from a resistance level. 2. When the current candlestick breaks the support level and reverses back to make a new resistance. 3. When there is the formation of bearish chart patterns and bearish candlestick patterns. In a downtrending market, when you identify these bearish technical factors as a confluence, it is a good signal to make a sell trade. In a sideways or a neutral trend, you can look out for the same technical factors to either make a buy trade or to make a sell trade. Notice that in a sideways trend, it is better to trade along with the price reversals from the support and the resistance levels. That is, you will enter a buy trade when the price reverses up from a major support level, and you enter a sell trade when the price reverses down from a major resistance level. You have to apply a risk to reward ratio of 1:1 or 1:more more to set out your stop loss and your take profit targets respectively. Meaning your take profit target should always be more than your stop loss target, so that even if you are making above 60% win rate, you'll still be a profitable trader. Now let us look at some examples of trades with this price action scalping strategy. With this price action trading strategy, we start performing the technical analysis from the higher time frame to the lower time frame. For scalping, we start performing the technical analysis from the 4 hours time frame. Let us look at the first scalping trading example. On the 4 hours time frame, we will try to identify the most current trend. The most current trend means the trend the market is going within a period of 1 day or 2 days. Here we can see that the most current trend is going upwards. So now we move back to the 1 hour time frame and find out if the most current trend is also going the same direction as the 4 hours time frame. On the 1 hour time frame, we can identify the trend to be going up as well. Remember, it is better to trade along with the trend. So since both the 4 hours time frame and 1 hour time frame are showing an uptrend, we will look out to make buy trades only. Next, we use the trend line tools to highlight the major support and resistance levels on the 1 hour chart. Next, we go on to the 15 minutes time frame to highlight the minor support and resistance levels. Finally, we move to the 5 minutes time frame and look out for other technical factors that support a buy trade. Or in other words, we look out for a bullish confluence. It is better to make buy trades at the major support levels. So we'll wait for the price retracement, and here the price has retraced back to a major support level on the 5 minutes time frame. Also, we can see that the prices has reversed upward from hitting the major support level. And we can also see the formation of some bullish candlestick patterns. So we have established 4 technical factors as a bullish confluence, so we can go ahead to make a buy order. We will enter the buy order here and apply a risk to reward ratio of 1:2 to set up the stop loss and take profit targets. We set the stop loss below the previous support level, and we allow the trade to run until it hits either of our targets. This was a profitable buy trade. The price hits the take profit target. Another scalping trade example. On the 4 hours time frame, the current trend is downwards. Let's move back to the 1 hour time frame to confirm the same trend as the 4 hours time frame. On the 1 hour time frame, the current trend is also going downwards. Since the prices are going downwards, we will look out to make sell trades only on the lower time frame. Next, we will use the trend line tools to highlight the major support and resistance levels on the 1 hour chart. Next, we will move to the 15 minutes time frame to highlight the minor support and resistance levels. And finally, we'll move to the 5 minutes time frame and look out for other technical factors to make a bearish confluence. On the 5 minutes time frame, we'll wait for the prices to retrace back to a major resistance level, and now on a major resistance level. Also, we can see that the prices have reversed downwards from hitting the major resistance level. And we can also see the formation of some bearish candlestick patterns. We have established 4 technical factors as a bearish confluence, so we can go ahead to enter a sell order. Enter a sell order here and apply a risk to reward ratio of 1:2 to set up the stop loss and take profit targets. We will set the stop loss above the previous resistance level and allow the trade to run until it hits either of our targets. This was a profitable sell trade. We can see the price hits the take profit target. Alright, for day trading, we are going to apply the same price action trading strategy that we use for the scalping, but the difference here is the time frame that we are going to use. For day traders, they expect to make trades and see results by the close of the day, and sometimes the trade can even last up to the next day, which is known as the intraday trading. Okay, the time frame that we are going to apply in the day trading will be much extended than the scalping strategy, and that is the only difference. But we are going to apply the same price action trading strategy on the 1 hour time frame or the 30 minutes time frame. And if you still want to see results much quicker, you can use the 15 minutes time frame for day trading. Okay, so step 1, you need to go to a higher time frame to be able to know the trend. For the day trading strategy, you need to move to the daily time frame to identify the trend. Next, you come down to the 4-hour time frame to confirm if the prices are going in the same trend. If the prices are going in the same trend as the daily time frame, then you have confidence to establish that the price is going in this particular direction. That is, if it is in an uptrend, you'll be looking for buy opportunities on the lower time frame. But if it is in a downtrend, then you'll be looking out for sell trades on the lower time frame. Okay. After that, you use the trend line tools to connect the major support and resistance levels. And you also use the trend line tools to identify the minor support and resistance levels. Next is to go to the lower time frame where you execute your trades. In this lesson, we are going to execute our trades on the 1 hour time frame. Again, on the 1 hour time frame, you use the trend line tools to identify the minor supports and resistance levels. After that, you see that you have a whole lot of key support levels and resistance levels on which you can depend to make your buy and sell trades. Now, the next thing to do is to wait for a confluence. If you identify the trend to be going up, then you can look out for these bullish technical factors as a confluence to make a buy trade. 1. When the current price is reversing back up from the support level. 2. When the current candle breaks the resistance level and reverses back to make a new support. And 3. When there is the formation of bullish chart patterns and bullish candlestick patterns. You can then go ahead to make your buy trade when you get this confluence, applying a risk to reward ratio of 1:1 or 1:more to set out your stop loss and take profit targets respectively. On the contrary, in a downtrending market, you can look out for these technical factors as a confluence to make a short order. 1. When the current price is reversing back down after hitting a resistance level. 2. When a bearish candlestick breaks a support level and reverses back to make a new resistance. 3. When there is the formation of bearish chart patterns and bearish candlestick patterns. Again, when you identify these bearish technical factors to support your sell order, you can go ahead to use a risk to reward ratio of 1:1 or 1:more to set out your stop loss target and your take profit target respectively. And yes, when it is in a sideways trend, just like the scalping strategy, you need to notice that it is better to trade along with the price reversals from the support levels and the resistance levels, okay? That is, you will enter a buy trade when the price reverses up from a major support level, and you enter a sell trade when the price reverses down from a major resistance level. Now, let us look at some examples of trades with the price action day trading strategy. For day trading, we start performing our price action technical analysis from the daily time frame. Let's look at the first day trading example. On the daily time frame, we can identify the current trend to be going up. So we'll move back to the 4 hours time frame to confirm if the current prices are in the same trend as the daily time frame. The current prices are trending up as well, so we will look out to make only buy trades. Next, we will highlight the major support and resistance levels on the 4 hours time frame. Finally, we will move to the 1 hour time frame and look out for a bullish confluence. Here we can see the prices has retraced back to a major support level. Also, we can see the prices are reversing upwards after hitting the major support level, and we can identify the formation of some bullish candlestick patterns. So, we have 4 technical factors occurring at the same time as a bullish confluence to make a buy trade. Enter a buy order here, applying a risk to reward ratio of 1:2 to set up the stop loss and take profit targets, and allow the trade to run until it hits either of the targets. Set the stop loss target at a level below the previous support level. This was another profitable buy trade. The price hit the take profit target. Another day trading example with the price action trading strategy. On the daily time frame, we can identify the current trend to be going downwards. We'll move back to the 4 hours time frame. The current trend of the market is downwards as well, so you look out to make a sell trade. Next, we will use the trend line tools to highlight the major support and resistance levels on the 4 hours time frame. After that, we will move back to the 1 hour time frame and look out for a bearish confluence for a sell order. Here, the prices has retraced back onto a major resistance level. Also, the prices are reversing downwards after hitting the major resistance level, and there is the formation of bearish candlestick patterns. Now, we have established 4 technical factors as a bearish confluence, so we can go ahead and enter a sell trade here and set a stop loss and take profit targets in the ratio 1:2 respectively. The stop loss target should be set at a level above the previous resistance level, and we will leave the trade to run until it either hits the stop loss targets or the take profit targets. This was another profitable sell trade. The price hit the take profit targets. Yes, swing traders can also apply this same price action trading strategy. Swing traders can hold a position for a number of days to weeks or even months. So for swing trading, you can apply this same price action trading strategy, but here you need to draw your market structure on the monthly or the weekly time frames. And then you execute your trades on the 4 hours time frame or the daily time frame. Now, all that you need to do to master this price action trading strategy is to practice. Okay, you can do some back testing with the strategy, and then you can also practice with a demo account for some time and then see how it works. When you become very confident at using the strategy, you can start trading with your real money. I wish you more successful trades with this price action trading strategy.